Also, earlier in the day, there was some optimism over trade when the White House indicated that Chinese trade negotiators do want to make a deal. The next round of talks are scheduled to begin tomorrow evening. But with the sizable increase in tariffs still set to kick in very early Friday morning, there is concern that a full-blown trade war could stunt already fragile global growth. And that could change the thinking of central banks around the world. Steve Liesman has more.
Economists are taking seriously potential impacts of more tariffs on growth, on earnings, and on central bank policies. J.P. Morgan, in a new report, says the tariffs could take 20 basis points off of U.S. growth this year. UBS estimates that full-blown tariffs as threatened by the president could shave 45 basis points, near a half a point, off of global growth and hit U.S. earnings. The impact from the rise from 10% to 25% on the existing set of tariff Chinese goods would take 2 percentage points off U.S. earnings. 25% tariffs on all Chinese goods would take another 7 percentage points off.
You're in that environment now where uncertainty is rising. Obviously, the tweet on Sunday hitting markets where we now have to think about the possibility of that 25% tariff step up and the risk of further escalation. And you're seeing equity markets price that in. In terms of sectors most hit by that tariff step up, our work shows tech and industrials getting hit the most, and they were leading the market lower yesterday.
And economists think a full-blown trade war or not can have a decisive impact on the Fed's next move. Jeffrey says if there's a breakthrough in the trade negotiations, a Fed rate hike as soon as late 2019 would be back on the table. Medley Global Advisors cautions the trade war between China and the U.S. could force central banks into easing that is contingent upon how domestic economies fare in heightened global trade uncertainties. So if nothing else, the trade fight has introduced tremendous volatility into market expectations for growth, for earnings, and for interest rates from central banks. For Nightly Business Report, I'm Steve Liesman.